Just a double banger, if I could. Given the obvious political ramifications of this decision, are you disappointed the bank didn't wait until it's seen the official wages data on May 18? And secondly, as for the retail banks, given history has always shown they're quick to pass on these on mortgages, would you like to see them show equal haste with deposit rates?
Well, Prime Minister, Phil, and the banks will take their own decisions, and as you know, we've always encouraged them to make the changes that have been made by the Reserve Bank. The decision of the Reserve Bank today is an independent one of government, and both the Prime Minister and I have been consistent in that. They have said publicly that what they wanted to see before they moved on interest rates were two things. One was that inflation was sustainably within the band, and we know that inflation is running now, as the Prime Minister just said, at 5.1%. And they also wanted to see wages pick up. And in today's statement, they made it very clear that wages are picking up, and I also referred to that in terms of the budget and the upgrades that we have made. So we don't have an axe to grind with the Reserve Bank. They are independent of government. They have to make decisions based on what they are seeing through the economy. But it is very, very important to underline the fact that these are global factors that are driving up inflation. Both the COVID pandemic, which has seen supply chains disrupted, and the war in Ukraine, which has seen a spike in fuel and other commodity prices. And in the inflation numbers, we saw a 35% increase through the year with fuel prices, which was the single biggest increase in fuel prices since Iraq's invasion of Kuwait back in 1990. And as the Prime Minister referred to, other countries are seeing higher inflation rates than Australia is seeing right now. So these are international factors having an impact here at home, but it would be completely unreasonable for any objective analysis to think that emergency level cash rates and monetary policy could stay indefinitely. It had to normalise, and it's actually a reflection of an economy coming back to life after the shock of the pandemic.
Treasurer, the Prime Minister has talked about the prudent planning of Australian households. Part of that planning for many of them was the RBA's guidance only 6 months ago, and for a long period, that the cash rate would remain on hold at 0.1% until 2024. Do you think the RBA Governor should have provided different guidance, got that wrong by providing such a date guidance? And should that kind of communication that people have relied upon be part of the review that will happen after the election?
Well, I'm not going to provide a running commentary on either the RBA or the Governor himself, other than to say, as the Prime Minister said, we had a very positive, constructive and effective working relationship where fiscal policy and monetary policy have been in sync through the crisis to Australia's benefit, and you can now see that in the headline numbers. But I point this out to you. As you know, the Council on Financial Regulators met not that long ago and increased the serviceability buffer to 3%. Meaning that households going into enter new mortgages had a buffer in place to deal with rising interest rates. We also know that both households and businesses have built up more than $450 billion on their balance sheets that was not there at the start of the pandemic. As the savings ratio comes down and health restrictions ease, this money will be spent across our economy, driving economic activity and driving down the unemployment rate. So I have great confidence in the state of the Australian economy right now, but also in the ability of Australian households to deal with the challenges they face.